The 13th Schedule. Section 61 of the ordinance provides for a tax credit to a person in respect of any sum paid or property given by the person as a donation, voluntary contribution, or subscription to non-profit organizations and funds as listed in the 13th Schedule to the ordinance, which was inserted vide Finance Act, 2021. The bill proposes to amend S. number 64 of the table in the 13th Schedule to give effect to the change of name of Prime Minister's Flood Relief Fund, 2022 to Prime Minister's Relief Fund for Flood, Earthquake and Other Calamities. The bill also proposes to insert the name of Film and Drama Finance Fund at S. number 65 in the aforementioned table. The 14th Schedule. Rules for computation of profit and gains for small and medium enterprises, SMEs. The Finance Bill proposes to introduce the following amendments to the schedule. Registration. Small and medium enterprises shall be required to register with Fiber on its IRIS web portal or Small and Medium Enterprises Development Authority on its SME registration portal, SMERP. Considering the proposed amendment in the definition of SMEs to include persons engaged in IT services or IT-enabled services, the rules now require that such persons shall be registered with and duly certified by the Pakistan Software Export Board, in addition to registration on SMERP. Increase in tax rates. The bill proposes to amend Rule 3 of the schedule to introduce a new Category 3 for SMEs having turnover exceeding 250 million but not exceeding 800 million rupees. SMEs falling under such category and opting for taxation under the normal tax regime will be subject to tax at 20% of the taxable income. The bill further proposes to amend Rule 4 of the schedule to introduce a new Category 3 for SMEs having turnover exceeding 250 million but not exceeding 800 million rupees. SMEs falling under such category and opting for taxation under final tax regime will be subject to tax at 0.75% of the gross turnover. Sales Tax Act, 1990. Goods Clause, 12, Section 2. Through Finance Act, 2022, the scope of the term goods is defined under the above said clause of the Sales Tax Act, 1990 ST Act, was broadened by classifying production, transmission and distribution of electricity within the scope of the said term. It is pertinent to note that recently in 2023, there has been a consensus between the provincial and federal governments regarding rules for the place of provision of services in respect of certain specified services. In light of the said rules, the transmission and distribution of electricity has been treated as a service for which the taxing rights between provinces and the Federation would be by the specified rules which shall be effective from July 1, 2023. Consequent to said change, a taxable service entry is also proposed to be inserted through this bill under serial number 60 of Table 1 of the Schedule of Services provided under the ICT Ordinance, 2001 with an applicable tax rate of 15%. Consequently, the bill proposes to restore the previous definition of the term goods before the amendment made by the Finance Act of 2022, by removing the words production, transmission, and distribution of electricity from the definition of goods. Supply Clause, 33, Section 2. The bill proposes to synchronize the definition of supply by removing production, transmission, and distribution of electricity from the definition of supply. The proposed amendment is in line with the amendment proposed for the definition of goods. Tier 1 Retailer Clause, 43A, Section 2. The bill proposes to curtail the current list of qualification criteria for Tier 1 retailers outlined in the ST Act. By this amendment, the retailers of articles of jewelry, precious metal, or metal clad with precious metal, as well as the retailers qualifying based on shop area-based criteria, would be brought out of the scope of Tier 1 retailers provided that they are not covered for the reason of meeting any other qualification criteria specified under Clause 43A, for Tier 1 retailer. Directorate General of Digital Invoicing and Analysis Section 30 Ka. By substitution of Section 30 Ka, the bill proposes to change the reference of the Directorate General of Digital Invoicing and Analysis with the Directorate General of Digital Initiatives. Offenses and Penalties Section 33. Presently, any person who manufactures, possesses, transports, distributes, stores, or sells cigarette packs with counterfeited tax stamps, banderoles, stickers, labels, or barcodes or without tax stamps, banderoles, stickers, labels or barcodes is subject to certain penalties under serial number 23 of the table provided under Section 33 of the ST Act, which inter alia includes confiscation of goods and a monetary penalty of Rs. 25,000 or 100% of the amount of tax involved, whichever is higher. The bill proposes to expand the scope of such penal action by substituting cigarette packs with goods specified by the board under Section 40C. Thank you for watching. 5th Schedule, Zero Rated Supplies. A. New insertion. The bill proposes to insert the following new entry into the 5th schedule to provide a zero rating facility on imports and supplies made to and by RECODIC project. B. Scope of existing entry enhanced. 1. The bill proposes to enhance the scope of zero rating by amending the description of Clause 25 in Column 2 of Serial Number 12 to bring it in line with the description of PCT Code 9017.2000 as explained below. 1. The bill proposes to enhance the scope of zero rating for exporters registered under the Export Facilitation Scheme 2021 by adding the term commodities to the description in Column 2 of Serial Number 21 as explained below. 6th Schedule, Exempt Goods. Table I, Imports or Supplies. A. Omission of items currently exempt from sales tax. The bill proposes to omit the following entries from Table I of the 6th Schedule, which has already become redundant due to the expiration of the exemptions time limit mentioned in their description. B. Limitation on the scope of existing exemptions. Currently, the exemption from sales tax is available to the following goods only in cases where such goods are sold otherwise than in retail packing under a brand name or trademarks. The bill now proposes to withdraw exemption on the following goods sold under a brand name or trademark even sold otherwise than in retail packing. The proposed revisions in the description of such entries are explained below. C. Scope of existing exemptions enhanced. I. In Serial Number 121 of Table I, the bill proposes to add an explanatory note to clarify that blood transfusion sets not packed in aluminum foil imported with blood bags CPDA-1, in corresponding quantity in the same consignment are also exempt. 2. The bill proposes to increase the time limit of exemption for the following entries from June 30, 2023, to June 30, 2024. Entry number 151, which pertains to supplies and imports of plant, machinery, and equipment for installation in tribal areas. Entry number 152, which pertains to supplies of electricity to residential and commercial consumers in tribal areas. D. New insertion allowing exemption of sales tax. The bill proposes to exempt sales tax on the import or supply of the following items by inserting the respective new entries under Table I of the 6th Schedule to the ST Act. Table 2, Local Supplies Only. A. Limitation on the scope of existing exemptions. Presently, the exemption from sales tax is not available to the following goods sold in retail packing under the brand name. The bill proposes to withdraw exemption on the following goods sold under a brand name, either in retail packing or otherwise. The proposed descriptions of such entries are given below. 8th Schedule, Goods subject to specified rates. Table I. A. Revision in the reduced sales tax rate. The bill proposes to amend sales tax applicable on the supplies made from retail outlets which are integrated with Board's computerized system as under. B. Scope of reduced sales tax rate enhanced. The reduced rate of 1% is presently restricted to substances registered as drugs under the Drugs Act, 1976, and active pharmaceutical ingredients, excluding excipients, for the manufacture of drugs registered under the Drugs Act, 1976, or raw materials for the basic manufacture of pharmaceutical active ingredients. Said reduced rate of 1% is now enhanced to the medicaments classified under Chapter 30 of the First Schedule to the Customs Act, 1969 with certain exceptions. It is important to note that this relief is proposed to be applied retrospectively from July 1, 2022. The tariff headings, reduced rate of sales tax, and conditions for the application of the reduced rate remain unchanged. The proposed descriptions of entries 81 and 82 are as follows. Federal Excise Act, 2005. Duties specified in the first schedule to be levied Section 3. The bill suggests introducing a new clause, E, to subsection 1 of Section 3 of the Federal Excise Act, 2005, FEI Act, expanding the scope of ad valorem, 15%, to cover any item listed in the first schedule to the FEI Act. This amendment aims to streamline the application/chargeability of federal excise duty on goods and services. Appointment of federal excise officers and delegation of powers Section 29. To regulate digitalized invoicing, the bill proposes to introduce the Office of the Directorate General of Digital Initiatives, through the insertion of a clause, D, in subsection 2 of Section 29 of the FEI Act, which shall consist of a Director General and various other officers appointed by the Board. Power of Board to make rules Section 40. The bill proposes to introduce a new subsection, 4, into Section 40 of the Act, which requires that all rules made by the Board under the Act shall be collected, arranged, and published along with the general orders and departmental instructions and rulings, if any, and sold to public at reasonable price, or it may be placed on the Board's official website on regular basis. First Schedule. Table I, Excisable Goods. The bill proposes to insert the following new entries to Table I of the first schedule to the FAY Act. Table 2, Excisable Services. Although the term franchise as defined under the FAY Act already included technical fees and royalties within its scope, the application of FED on royalty and technical fees under the head franchise has been a debatable matter subjected to litigations. To overcome this ambiguity, the bill proposes to expressly include the fee for technical services and royalty in the dutiable service heading, by substituting the existing description in entry number 11 of Table 2 in the following manner. Thank you for watching.